I don't hear any repeating. It sounds so much better. Might have lost everybody. Kind of sucks. I do hear the repeating though. Do you?
Faintly. I don't know. Maybe there's not enough yet. It's got to build.
My gosh, just killing me. Yeah, so I had pneumonia, so I wasn't able to like do much.
Yeah, that's a bummer, but probably better in Florida than in New Jersey.
I really just don't like this. We lost everybody. Everybody went away. It's just you and me.
That's a bummer.
Well, they don't know the new meeting ID, which is exactly the same as the old meeting ID.
Yeah. Is this the first time you've tried YouTube?
No, I did it once before. Hi, New York City realtors. You are not chopped liver. He's on you. He's on the YouTube version. What do you mean? I just called you nobody. What are you talking about? Yeah, but it's been that long since I've seen you or heard from you. Well, we might, if we don't get over these technological issues, we might, it just might not happen. It's just you and Nick. Let me try. Reaching out. I mean, I'm using, you know what sucks is I did this the last time too, the last time we had a meetup, and I used the same technology, same computer. And this did not happen. Every time you send an email on Meetup, it opens a new tab. It's very annoying. Sorry, Peter. I don't know what's happening. Sorry, Peter. I don't know what's happening. Steve, they're being recorded for because by virtue of them being on YouTube. Steve, they're being recorded for because by virtue of them being on YouTube. So Nick, that's the trick. We've got to speak and then wait a moment.
Okay.
So Nick, that's the trick. We've got to speak and then wait a moment. Okay. So Nick, you have any note stories you want to tell?
Oh boy. I could ask you about one because I know you don't service before you get a modification. And I have a loan that I got roundabout from a friend sort of thing. And it was never, when they purchased it, it was never properly boarded. And they basically just handed it to me and I didn't do anything with it. So I haven't sent monthly statements or anything like that. Is that an issue?
It's not actually. Statements are something that I generally send. It's not something that you actually have to.
Do you have your own software to prepare the balances and things, or you just kind of spreadsheet it?
Remember my pack note log that I showed you?
Yes.
So that's up to date always as of current date.
Yeah.
And then I just do a mail merge to a Word template with those numbers.
Right. Yeah, this is kind of an interesting one because it's sort of old. There's not a lot of, in fact, I don't think there is any equity on it, but the borrower is in the Navy. And so I think they lose their clearance, right? If they get foreclosed on. So I think I'm going to have to take it to legal and then get some sort of payoff.
Well, you can't foreclose on active military.
You can't foreclose on active military?
Yeah, it's like the first thing that lawyers check for to see if the person is active military.
But isn't it that if they're deployed?
Well, it's questionable. I've had lawyers tell me both things.
Yeah.
I mean, they often do active military checks. I don't know if in your title searching you've ever seen that people will actually record their discharge papers and things. Yeah, Matt Kelly's chiming in. He's saying the Soldiers and Sailors Act, active military, not reserve, inactive, etc. You can check on the Department of Defense website.
Does that count for any military position? Because she's not deployed. She just has a career job in a Navy, I don't know, like a headquarters of some sort. I think she's in computers.
Yeah, if they're active military, it doesn't really matter what they're doing. If they're active, they can't be foreclosed on. But according to Matt, you can check their active status on the DoD website.
Yeah. Okay.
I mean, you could still put a Liz Pendants on because that's really just a cloud on the title. It's in a judicial state, it's generally the beginning of a foreclosure. But if you don't follow through, it's just a cloud on the title. No, Matt, you should be able to put a Liz Pendants on there. It's just a cloud on the title. It's just to let everybody know that you're out there with an
Well,
open.
and I should say that the first had actually filed for foreclosure as well, and she somehow reinstated with them, and that was an active legal case.
Yeah, I don't know how they did that though, because it really is illegal to foreclose on active military. I think I might have just figured out the problem. Of the duplicate sound. Ha! I figured it out. Know what it was? You want to know how stupid I am?
You click the no echo button?
No. I'm also showing it. I'm also so I could see the chat on YouTube. I have to have YouTube up in order to and it was getting the duplication from the YouTube YouTube audio. Oh my god, I'm so stupid.
Okay, thanks, Matt, for that, because it looks like there's a
Matt is
designation between active and not active. Or the
okay. So
definition.
I'm misunderstanding the verbiage active. So desk job support services are not considered active. Okay, so that's why then she was able to do it, or the other company was able to do it. Okay, that's good. It's good to know. I just learned something. That's why I love Matt on this call, because I always learn something when Matt is here. I just wish you could talk to us, Matt. Now that I have the echoing off. Hey, Jay. Hey, Steve. Steve is a newbie. Everybody can talk, by the way, if you have a microphone, except for Jay Johnson. Everybody could talk if you have a microphone. I just unmuted you. See if you can talk, Matt.
Can you hear me now?
Oh my goodness. I'm such a twit. Everybody knows that, right?
We love and accept you for who you are.
Hey, listen, if you can't accept my twittiness, you're right. Need to accept me for who I am. I can't believe that echoing was coming from YouTube. That's just so funny.
So the Department of Defense website where you can check, and keep in mind it's either active military or not active military. There's really no in between. You can just look up SCRA or the Department of Defense non-military verification. You can Google it. It's very easily found. And you basically type in a person's name and some other basic information. It's called the single record request. And you can find out when they serve, their discharge date, anything else active or not active. Just make sure you check within the last 12 months, I believe it is. It's been a while since I brushed up on it, but you do need to check to see if they were served within a certain period of time.
Okay, yeah, I've seen that check before, but I guess I just thought that it was only relevant if you were deployed. Like you couldn't foreclose on a house while someone was in Afghanistan.
True, law does not view kindly on somebody going to another country getting shot on their behalf and us foreclosing on them because they didn't have the money themselves. But an example, we had one individual. He was a submarine captain, and whenever one is on a submarine, they're active duty, just due to the risks involved and everything else.
Yeah.
Whereas most other individuals, it's not exactly that way. So that's something that we had to pay attention closely. It's something we certainly take more time to look at because we look at hundreds, if not thousands of notes at a time when we do our underwriting. So it's very labor intensive and effectively just due to time cost intensive. Go to the Department of Defense website and check every single one in advance. Now, clearly we do it before collections, but I mean, it's kind of in a heavy military area. We'll double check at that point, but it's something you do want to understand just because the consequences are horrendous if you do it. And Liz pendants, as it's effectively the first step in the foreclosure process. If you file a Liz pendants, that's not constructive notice. Putting you on title and putting everyone on record, that's your assignments recording. And of course, you can do that.
Right. But it's interesting because the Liz pendants in a judicial state is definitely usually considered the beginning of a foreclosure, but it's technically just a cloud on the title. So I don't know. What do you I mean, technically that's all it is. What do you think?
I don't exactly agree with it, but what are you talking about? I mean, it's not a cloud on title. It's a legal action, and you can't just file one randomly. You really need to do something, because if you effectively just, let's say, record a Liz pendants, which you need to be an attorney to do that. There's noticing requirements. There's things that happen after the actual Liz pendants is recorded. You're not just doing a Google image search and recording it, randomly. There needs to be something to support it. And if you just decide to record it and sit around and do nothing, you put yourself at risk of laches, which is where they invalidate your lien due to non-action, or at least prevent you from going further with a court action. And depending on what information submitted with the Liz pendants, you may also be putting yourself at risk because you're choosing to do nothing of not going forward with the foreclosure and running up against statute of limitations and issues along those lines.
I'm going to defer to you as
Okay.
the legal,
La-
for the
yeah.
legal jargon, I will defer to you.
Laches is a very good thing to look up. It's LACHES.
Everybody Google that.
I think I was arguing with somebody on Facebook earlier about latches.
Really? By the way, happy holidays, everyone. I forgot to mention that. And happy New Year. '2020 is going to be a great year. All right. So does that answer all of your questions? I'm so glad to have you here, Matt.
Hey, it's your program.
Well, I know, but I'm glad to have
take it
you.
over.
You're always welcome to take it over. Are you kidding me? Always glad to have you.
I'm not taking it over.
You should. Run it. No, I'm just kidding.
Why don't you talk about what conferences you're going to go to this year, or which ones you'd recommend to people and why?
Well, if you're a newbie, you definitely have to do Paper Source because it is 100% education, no selling allowed. That's an absolute must. In terms of other conferences I'm going to this year, the answer
You got to say why they have to go, just for the legal updates.
Oh, well, yes, that's part of it, of course. But for me, I'm not going to any conferences this year. PAC is not doing it this year. We used to love Distress Note Expo, and we don't love it anymore.
I understand. Trust me. You're well aware.
Thank you. I'm going to assume that that's also concurrence with my theory or with my thoughts.
Did they announce who's running it this year?
Yeah, it was purchased by Kimberly Fawcett Banks and her group.
Yep.
Yeah.
Yeah, I'm looking forward to seeing who they have speaking and things along those lines. But I always cautiously approach them before anything else, and haven't really.
Did they announce an event?
I don't think they've announced anything, have they?
Yeah, not that I'm aware of.
I haven't seen anything. I think it's interesting they took my New Jersey distressed group away, not the New York group, but the Jersey group, and sold it along with the Note Expo. So I don't really know any more details about it, but we're not going to it. Paper Source is only great if you're a newbie and you really need to learn something. And then IMN ones are just, as far as I'm concerned, just too expensive for the value. It's more of a networking opportunity, and
They're free, basically. I mean, it costs to stay at the hotel and do everything else, but I know they charge a couple grand for it. But if you actually call them and say you're a note buyer, they usually give you free tickets.
Well, that's interesting because they are always charging us like $3,000 and $4,000.
Yeah, I could have used that tidbit about a week ago.
Yeah, exactly.
There is a 20% discount code SP20.
Yeah, there's a couple dozen of those.
Yeah.
You don't have to worry about that stuff. Just contact them and tell them you buy notes. Don't try to convince them you're the biggest and baddest out there, because then they smell money and they want it. But effectively, you're the one that they're marketing to.
Yeah.
We want people there to run up and say, I buy notes, I do this stuff. And try to says, I do support the small conferences, especially when an investor does not have regular contact with a trustee or an attorney in the states in which they invest or hold notes. Then it's great because they can get some of their legal updates that way. But I don't go to small conferences for that reason. because keep in mind, if I learn something at a conference, effectively that means that I've done something wrong for at least 6 months. And I've probably done that on hundreds and hundreds and hundreds, if not thousands of files. So that would be problematic, but it doesn't mean don't go to them. It's just keep expectations in line. It's also fun. I kind of tease just to say it's a good time to let the nerd flag fly. IMN's good, and the main thing is find out who you actually want to talk to. That's either major institutional lenders. You can go on a lot of their different websites or vendors' websites and see what conferences they're going and get the attendee lists, and set up meetings and everything else. That's always good. The other one I do suggest is going to ancillary conferences. Those are conferences that are not necessarily directly related to note investing, but they really are. Because, like an example, we go to the UTA, United Trustees Association. It's a conference for foreclosure trustees. Well, okay, we are one, but it's nice to go there as a note investor, specifically because, well, A, that's where they all get hammered. But it's just nice to be able to have conversations. And guess what? Foreclosure trustees and attorneys that deal with foreclosures deal with defaulted paper, and they know who's who and can go through an introduction process, or at least refer you appropriately. Next of which is like some other conferences we go to is the CLO conference, collateralized loan obligations. CLOs are not necessarily individual loans. If you ever seen the movie Big Short, that's really what they're talking about. The collateral, the tranches, the entire things. And those are made up of collateralized loan obligations, can be loans on boats, cars, just anything you could imagine. But guess what? The vast majority of them are mortgages. And they do sell off some of the portfolios, if not the entire damn thing on occasion.
Well, also, another type of conference to go to is like family office, conferences, things like that, as long as you're talking about the ancillary ones, because like family office conferences where you're going to find money if you need money, big money.
Yeah, but they usually are the REITs.
What do you mean?
The REITs, REIT, the real estate, I forget what it stands for, but those are
the real estate investment trust. Yeah, those are a whole different one. Family offices are set up completely separately. They're not always REITs. They're just family offices with huge amounts of money.
Mm-hmm.
Like Rockefellers, that, you know what I mean? That kind of thing. That's just an example.
Yeah, some of them are there, but so like an example would be how to find conferences to go to is look at some of the licensed brokers. And I do stress licensed brokers, not the unlicensed ones. And I use the term broker in quotations for them because it is a regulated and defined term. But a great one is, so like there's the FDIC licensed brokers. There's 3 of them. Mission Capital, First Financial Network, and DebtX. Just find out where they're going because they sell notes. That's actually mainly what they do. I mean, they sometimes sell millions of dollars worth of notes at a time, but we bought from them. Other people bought from them, and it's just about as upriver as you can get otherwise from direct from a bank. And you can get registered and you can find out where they're going. Not only talk to them, but guess what? Their clients are going there. That's why they're there, to solicit them as well. And the clients are the same ones you want to hit up.
And FNAC. You could always follow where FNAC is going.
Which one's Phoenix or the FNAC?
I never can remember what it stands for. First National Acquisition Company or something. The one Dan is in.
I'll not comment on them.
But good to find out where they're going.
So it's a lot about the company when they do say where they are going.
I mean, not for nothing. They deploy like 10 million a month if they're going to be somewhere, not necessarily an awful thing. As to brokers, Matt has a huge disdain for unlicensed brokers, as do I. Not a fan of the brokers.
Are you gonna say why?
The daisy
Sorry,
chain
you're gonna hear some
brokers.
stuff you're gonna hear some stuff in the background. I'm still scanning in some documents.
Oh, that's all right.
We bought. You got to go into one like the unlicensed brokers.
I don't like the unlicensed brokers, the daisy chain brokers. Don't like them at all.
We don't waste our time with them a lot, especially when they can't give us color, and that's approximately what they expect for the price of the note. It's a waste of time. Two, they're very often just going to take your stuff, add a few points, and submit it so that they can do an arbitrage, or also known as a double escrow, which that's legal, but not too many other variations of it are legal. Yeah, it's just a waste of time. Sometimes they'll do it just to get pricing expectations for the seller and let them know kind of what they may expect to get from the market, or they'll try to take your underwriting and do it themselves. I mean, there's a million different versions of it, but I really have known people that would send out lists to people, get bids, information, and underwriting, and then magically they'd end up the individual that they sent it to bidding would end up as the high bidder rather than anyone else.
Yeah, there's always that. It's just scummy. Brokers are just scummy. Jason has a question. Anyone know what's going on with the DBI offering? You talk about dream builders?
Yeah, they sent out an email week or two ago saying that they're going to do an offering and give them your information and whatever else that they can put it into their Salesforce system.
Yeah, it's been a long time, I think, since anybody's heard from them, huh?
I'll only comment on open litigation. It's not ours that we can say a couple other things. I'll check on the status of some of their litigation. That's fairly interesting.
Yeah, for sure. Somebody brought up Scott Carson last webinar or the webinar before and all of his current troubles. And the fact that they are still ongoing and that he's still trying to drum up business, which is kind of...
Oh, no, he is drumming up business. Let's be clear. It's not...
Yeah, well, yeah, of course.
Yeah, so he's still doing it, and he'll change his message. He'll start talking about, rather than single family residences, he'll start talking about commercial or multifamily, or the usual go-to near end of the rope is talking about the storage units and facilities. Not like those are just the ones that you bind the notes on those, rather than not actually going to them and bidding like storage wars.
Right. Jason writes, based on the latest email, it doesn't look like a typical DBI trade or typical trade. This is regarding DBI. They are using an escrow service to deal with their lack of credibility in the space.
Yeah, I can give you the open litigation on them too.
Well, he says he doesn't know if that's enough to overcome the trust issues. I have to tell you what's interesting is I've done a couple trades with DBI, and I personally I've had more problems with other particular note buyers who I won't, or note sellers who I won't mention by name, than I've had with DBI. I've actually never had any problems with DBI, to be quite frank. I had some notes that turned out to be invalid. They did a swap out, no problem. I personally have never had issues with DBI, and I've done like, I want to say
How have you
trades.
never had, what are the, well, let me go into the issues that we've had, and you can tell me how you never encountered that, because that is interesting. So some of the issues we encountered is no payment history whatsoever. We're given the raw data on the tape, and when we went to foreclose in various states, let's use Florida for an example, in a contested foreclosure, which happens almost 100% of the time, they'll request the kitchen sink, whatever, all information, documents, demands, everything else, and you actually need to provide that. Some supporting documentation to get the judgment as to the figures that are owed. And to actually get those figures, we need the payment history. We've had some success, but not 100% getting it from PNC, but that is not Dream Builders being helpful, so to speak.
Well, in answer to your question, I never go for that. I never go back to the seller. Excuse me. I always go back to PNC. I don't bother with the seller. So that might answer your question, because you're right. You know, we don't get payment histories off anybody. So I always just go directly to PNC. I don't, why would I deal with DBI for that? Like, I don't even think that way. I just go right to PNC.
Yeah. Let's see. Yeah, I'll send you some of the ongoing litigation with them, including the stuff with basically a friend of mine. He bought a note from and this is all old stuff. So he bought a note from DBI a couple of years ago. The litigation's been going on a couple of years. I can give you the case number. The case number is 18-05108, Liberty Holdings LLC and Dream Builders Investments plaintiff versus Aposta Inc., APOSTA Inc., and Gene Hacker. He's going through the litigation first, but basically the complaint cites that he bought a note, and it was just one note. It was a very big one, very expensive one with tons of equity. The first was for closing, and that's about the beginning, middle, and end of that story. But he put it in escrow, and the parties are named in here, which is Daniel Singer's office. And the law office is the Daniel Singer, and plaintiff deposited $100,000 with the law office of Daniel Singer, constituting the purchase price under the agreement. And those funds have been, they said, returned to the defendants, but I know that didn't happen for a very long time afterwards, because they released the money to Dream Builders, and Dream Builders never provided the collateral, never did what they were supposed to do. And the property sold third party, and there was a ton of surplus funds with Dream Builder claimed, and just gave him his money back.
Ooh. Well, that sounds like he should also be suing the escrow company.
He is, and it's an attorney. So yeah, they're going after everyone, and they're going to go after the litigation or the complaints done. Then I was told verbally by him, he's a friend, he's going to go after their or file a complaint against their law license.
Yeah, that's probably
but I'm not involved with any of that, so I can't. I'm not saying they are, or who's wrong or what not. I'm just reading the complaint, which I can forward to you another time if you like, Kathy.
Yeah, of course. I'd love to see it.
Okay.
Is it on Pacer, or is it federal, or is it by? Okay.
I'll send it to you.
Yeah, awesome.
Okay. Yeah, if other people want it, just ask Kathy.
Yeah, like I said, though, I mean, I've had more problems with other sellers than I've had with them, but that's my experience. That's why I'm always hesitant to offer negative words.
Hey, Kathy, what's your email? Is it just info@PacDesk or?
No, it's CJeffs. CJEFFS.
At Pac or Gemini?
At PacDesk.
Okay.
Gemini's going out, right? We're trying to close that down. We have a few notes we're still working. And then we're going to finally get rid of that one. Thank goodness.
It's a natural transition.
We've been foreclosing on some people for like 8 years. So annoying. You got to
tell people why and how the hell that happens. It's supposed to be educational.
Because it's New Jersey, that's why. I mean, we have the one never-ending note. Nick is going to die laughing, of course, about the note in New Jersey that we haven't. We're 8 years and 25 grand in, and we haven't even started foreclosing yet. Go figure that one. But there's a lot of, when just because it's New Jersey, that's really the answer. It's not California. It's New Jersey, and the moment there's any kind of contention at all,
Oh, and sorry to interrupt, Kathy. One of the things I'm going to send to you, I forgot I had it, and why I like following up with litigation like this is, so most people involved, like if you were to look us up and see the litigation we've been involved in, we're foreclosing. That's we don't have investors. We don't get sued by investors. But it's really good to do background checks, not just on homeowners, but also people that provide education services and people that you buy notes on. Quite honestly, you should look at them just as closely, if not closer, than a homeowner. That's something that escapes most people or isn't taught for very specific reasons. Anyway,
yeah, no, I agree.
love,
you should definitely do that.
but one of the things I love about litigation is reading into it is because statements are made under the penalty of perjury, and the exhibits are in writing. And one of the things I'm sending you is, it's an old one. This is from, it was actually filed 11/30/2018, but it was regarding a purchase from DBI, dated July 19th, 2013. It's the purchase agreement and the contract between DBI and Stellus. Stellus is their investor.
Yes. Stellus is huge.
Well, let's see here. Not the same one.
Yeah, no, I agree. Note sellers can be very shady, and it's why you have to really find out about them before you make a purchase.
Well, it's also why we're not doing a lot of that stuff. We have a inspection scheduled this week sometime, or at least it's supposed to be this week, with Deutsche Bank, so we can purchase from them. And just one of the recent conferences I went to, I mean, I got the person for Bank of New York Mellon, Millbank, Wells Fargo, some other hedge funds, Citibank. It's talked to them earlier this week and have to go through their process.
How come you don't forward tapes to Al?
Usually it has something to do with the non-disclosure agreements.
Well, don't we have one on file with you?
Oh, I meant ours with the bank.
Oh.
The other good ones for DBI that I'll send you is so I'm not really picking on DBI. But anyway, one of the other things that I like with some of the litigation is the oral arguments that take place, because again, they're under the penalty of perjury.
Yeah, well, those are always interesting, actually. That's what people say on the stand is
a lot of speculation.
Yeah.
But Matt, how many of those filings are just sort of out of maybe regular business operations? I mean, they work on a lot of loans, and so naturally there's going to be some problems here and there. And I mean, the issue with the escrow is that's pretty blatant, but I could imagine that others just sort of happen in the normal course of business.
Sometimes, sometimes you're going to get a note that's not great, and you didn't figure it out in your due diligence. And, as long as you figure it out within your reps and warrants period, you really shouldn't have a problem.
Yeah, have fun suing on that, though. It's normal course of business. It should happen 0% of the time. I mean, it's not hard to sell a note. You just do exactly as you say you'll do and give them exactly what you say you're going to give them. but there's entities that have done extremely large transactions. There's missing collateral. There's assignments that are not provided, allonges that are not provided, critical information that is, again, not transferred over. So those are things that are reps and warrants. And the escrow, while they don't look at things with a microscope, the main reason to have escrow used is basically once the criteria has been fulfilled, they release the money and then they release the collateral to the buyer. I mean, that's the definition of escrow. It's a good idea. Is it necessary? No. But is it a really good idea? Yes. Same thing with title insurance when buying an REO. Is it necessary? No. Well, depending on your financing, if you have some, but if you buy it cash, you don't necessarily need a title policy. It's just a really good idea to get one, and it's pretty cheap. For those that are curious about an escrow company that actually will escrow a note, the contact is Ann Rell. She's with Harmony Escrow, and I can give you their phone number as well.
Yes. Can you type it in there to me and then I'll put it out?
Let's see. Her. I'll just put it in the chat.
Yeah, I think you can only type to panelists though, so I'll have to copy it.
No, I can do it to everyone.
Oh, okay. Jay writes, Matt, you seem to have a good lay of the land, U.S. residential mortgages, whereas most small-time note investors don't seem to know more than their immediate network. How does one get to where you are? Industry knowledge, not legal background, a comprehensive overview of the mortgage market. Who are the big players? Who the big players are by number and dollars, and where in the value chain we fall. Apologies if you've already covered this, had technical difficulties, so only joined midstream. It's all right. We had technical difficulties too.
So what I would first recommend not doing is not going on Distress Pro, Scotsman Guide, or Lane Guide. Those are websites that pull that's generally freely available information. It's great at kind of summarizing it for you, but those are the ones that are like, we'll give you 1,000 numbers of asset managers and just start calling them and see what they got.
Which I think is a waste of time.
That's why I said not to do it. But why is it a waste of time? And explain why it's a waste of time from your opinion.
Well, for me, it's a waste of time because I don't have $17 billion in my pocket. And why would a special assets manager sell me their assets when somebody else does have $17 billion in their pocket?
That's a difference of mindset that we have, because if I encounter the best deal on the planet, I am going to get the money. It's not a problem. And even if I can't take all of it, which this is something we regularly do, and this is partially an answer to that question, how to scale is encountering the deal that's too big, as long as the numbers are right, is not a problem. And what I mean by that is if you encounter a good deal, especially if it's a large portfolio of notes with a lot of different notes in there, that's where it's called call the cavalry, call a company that's larger, more experienced, whatever else than yourself, because it is a completely different animal doing a underwriting on 100 or 1,000 notes compared to just 10, and doing so in a cost-effective manner. And I'll go into that story in just a second. But that's where you can take a small piece of the pie, just buy whatever you can, or get some JV funds from other investors to be able to take a larger piece of it. But that's where, someone else can get their notes, you get your notes, and everyone's happy. And you bought yourself a little bit further up the river.
Right. And I agree with that. And we're involved in note groups and stuff. But like I said, unless you're a part of their existing network or the good old boy club, they're not they're not going to share with you. I mean, that's my general take on it. I could be wrong.
So my recommendation on where to find notes, the who's who and everything else is one of a couple different strategies. And we're talking about first position liens and second position liens. I'm not talking about contract for deeds. For first position, second position lien, the who's who, finding out who's active and not, look at the conference attendee list. This is why you don't need to go to the conferences. You just need to get their attendee lists. And even if they don't give you the people's names, phone numbers, and email addresses, all you need is the company name anyway. So you can contact them and just say, hey, who's going or who went last year? I'm thinking about going this year. Or something along those lines. They'll give you the list. And from there, you can take your time, go through it, check on LinkedIn, Google searches, things like that. And you can read about the company and what they do. And if it sounds like they do what you want or have product that you would like to purchase, you can reach out to them. And trust me, I don't remember everyone I meet at a conference anyway. So feel free to just tell them, yeah, I met you at the, X, Y, and Z conference. And that's a great way to find out kind of who's active and who's not. And through your own research, find out how large they are. The other one is the top-down approach, and that's try to get the list from entities like I already mentioned, First Financial Network, DebtX, Mission Capital, things like that. If you can get the list, because they don't always have stuff in terms of what you want to buy, like they don't always have second mortgages. They generally always have first, and some of them are jumbo loans, like hundreds of thousands of dollars. They usually don't have the low balance Midwest Rust Belt crap. But that's where you can just get the list, and you may not buy it clearly, as sometimes these go for the tens of millions of dollars. But just keep the list and follow up with the broker and say who won it, and then you try to buy from the people that won it. We did that. That's, we bid on a massive tape that was kind of mid last year, didn't win it, and I was pretty sore about that one. But regardless, the people that won it flipped a lot of the notes, and we bought a large percentage of the portfolio. The great part was we didn't have to buy all the crap we didn't want. We just bought the stuff we did want.
Mm-hmm.
The other one's a bottom-up approach, and that's where the widely available notes tend to be highly picked over on the brokering websites. Papers, there's a whole slew of them. Watermark, I'd have to look at some of my presentations to remember them all. Paper Stack, I know FCI has their own little site, and like I said, they're a dime a dozen. But anyway, you can go on those websites and see where the note has been, whether it be the allonges, the chain of title, looking at the assignments, whether they're recorded or not recorded. And with that, you can actually find where the note's been and try to contact those companies.
Yeah, there's a lot of different strategies to employ, no doubt.
Well, that's the targeted one. So you don't have to reach out to 10,000 people. You can make, 2 phone calls and get 2 responses.
Right.
Because by looking at the attendee list, you can filter out the people or put in a different category, people that are just like yourself. You can remove all the vendors. So not there to talk to them and just see the individuals that are actually, active.
It's interesting though, like IMN always sends me their list, but it's never, contact information. It's just
You
company
got to call them
names.
for it.
Yeah.
And even if you pay to go to the conference, they have an internal communication system. It's actually Salesforce, because they want everyone talking to each other through their system, not, via email. So you can get that information in other ways.
Right. Jason writes, those 3 brokers, could you repeat? First Financial Network, Mission Capital, and who is the third?
DebtX. It's also on the FDIC website.
And then he writes, how do you phrase it so they're willing to share?
All you do is ask them that you want to get qualified with them and fill out their paperwork. You don't have to say you got $10 million. I don't mean to be so flippant about it, but it's really not hard to get qualified with most entities. I mean, sometimes it's hard if you've never done business and you're brand new. Don't ask a lot of questions. You just answer the ones that they want answered.
Yeah, a lot of times today, though, and this is where it can get tricky if you don't actually have the money, they ask you how much you have to deploy, and then they ask you for the proof of funds, which you've been doing this a long time. You're probably not encountering that so much anymore. But it is fairly common.
I also don't deal with those type of individuals.
Yeah, well, some people looking for notes need it, or they have to. So.
Oh no, I totally get it. That's when they don't want you to get it and just try to resell it after you get it and that sort of stuff. But yeah, we really haven't. I mean, the FDIC, the major institutional banks, that's the last way to impress them, is to say how much money you have. And two, I mean, we have so many different entities and LLCs and businesses, all of which are related to notes. Some of which are actually massive companies. That, I mean, which frickin' bank statement do you want? You want us to mush them all together?
Right.
It's ridiculous. So that it becomes problematic in many different ways. And yeah, we haven't dealt with that. We don't experience that as an issue. And I think it's a red flag when somebody asks for that sort of stuff. Besides, most people, what are they going to do? So they have the money. If it's not in notes, I mean, they're not sitting on a pile of cash. Most investors are smart investors. They'll have it in the stock market. They'll have it in somewhere else where it's not sitting there as taxable income, earning absolutely nothing. So what they want them to do, sell all their assets so they can have a big number and then submit it, or just cross their fingers that person isn't good at Photoshop.
Right. What we do is we just move, for when people require proof of funds, we just move money into an account for like an hour, print it off, and then send it out. And then move it back where it came from.
But so that's my, either way, to find out kind of the who has what and everything else. May not necessarily know what they have. But it's a good way to find out is the attendee list and the top down and bottom up. And that's go look at the lists that are out there and see where they go or where they've been.
Well, I would say that's perfectly sound advice. Does that answer your question, Jason? Jason says thank you. Awesome sauce.
Sorry, some other conferences we go to. So I mentioned IMN, and there's a ton of different ones there. Not necessarily the note specific one. They have other ones. The CLO conference, there's the5star.com. That one's fine. MBA for Mortgage Bankers Association. That's a massive conference. And then there's state specific ones, like we're in California. So sometimes we'll go to the California Mortgage Bankers Association, their annual conference, and there's tons of other ones. But those are some large ones.
Absolutely. Absolutely, sir. All good advice here from Matt Kelly. We love having Matt. Let me see. Do I have somebody just type something? Dag nabbit. So Matt, you want to talk about the difference between judicial and non-judicial for those who don't know?
You already covered some of it by saying you've been foreclosing on some notes for 8 years.
I know it's so just. Listen. One of them I haven't even started foreclosing yet, and I'm
Okay.
8 years in. So
Wait, how are you 8 years in and you haven't put them in foreclosure? You could just say that there's no equity or it's not really worth it, or
oh no, there's
you're
plenty of
making
equity, and it's
documents.
well worth it. Plenty of equity and well worth it. No, this one is a ridiculously odd scenario in that when we bought it as a second. And then during our title search, we found out that we were fourth. You might not know this story. Nick knows it very well because he's heard it quite a bit, but we found out we were in fourth position
You want
instead.
to give me the property address and I can look it up?
Well, no. Let me tell you the whole story first. I'll give you the property address. It's 128 Miller Road in Kinnelon, Kinnelon, New
I got it.
Jersey. So the story is this: we bought it as a second, found out after an $800 title search, is way back in the beginning before I knew how to do title searches, that we were in fourth position. So I started looking at the order in which the mortgages were taken, and I started realizing some of those had to be satisfied. So I called a whole bunch of first we sicked our lawyer on it to get lien satisfactions, and they couldn't get it done. So I went on a mad faxing campaign and got 3 of the mortgages satisfied. So that moved me up into first position. So now here's where the fight comes in. Here's where the 8 years and the 25 grand comes. Both the first and the second were issued by PNC.
Mm-hmm.
The second recorded their mortgage 8 days after it was executed. The first recorded their mortgage 18 months later. So
Okay.
even though they were intended to be the first, 18 months later, they became the second. And of course, within their own company, they didn't do a subordination of mortgage.
How do you know?
Huh?
I'll get there in a second. I'll let you finish your story. Sorry.
That's all right. So now what's happening? So we then initiated foreclosure as first position, and PNC number 1 steps in and says, "Oh no, we're number 1." And the judge ruled in our favor. And then they appealed and the judge ruled in our favor. And then they appealed again and the judge ruled in our favor. And of course, years are passing while this is happening. Now they've appealed again under a new theory called circular theory. And now we're fighting that, because my contention is that's great. Circular theory implying what was meant to be first should then be first. Where I'm saying, well, that's all well and good, but we're not talking about 2 different banks here. We're talking about the very same bank. Whose fault is it? Both of these mortgages were written by the same bank. Whose fault is it that the first was incompetent and didn't record for 18 months? So that's kind of where we are right now, is defending against this circular theory argument, which is a whole new argument, which is why it's a whole new thing. So go ahead with what you were going to say.
Okay. So there's a lot to unload with this one. This is the debate of when is a first mortgage not a first.
Right.
You and I both know somebody, and I can't say who they are. They're not on. I assume they're not on the call, but I don't really care. So I can't say who they are. But anyway, they bought a mortgage, thought they were first position, and because their lien recorded like one instrument number before the other one, and the other lien was foreclosing. They foreclosed, and so contacted us. So start foreclosure. Okay, no problem, we'll do it. And through the discussion, points out, hey, this is, the seller thought it was a second mortgage. Ha ha ha. And then I said, well, hold on. How do you know you're a first position lien? And he says, well, it recorded one instrument before the other one. and I promise I'll get to the point in just a moment. So when documents record, it's not necessarily by date of recording or even the instrument number that can necessarily determine lien position. What determines it, very often more so than anything else, is the intent. This is where we go back to the escrow instructions where they say,
Well, this is the
record this
circular
first.
theory. This is the circular
Yeah.
theory they're filing
So
under now.
record this first, record that second. But when it goes to the, let's say it goes to the county, that's where they say that, one machine may have been recording faster than another, something else along those lines. So when documents record on the same day, they're generally given equal priority, so to speak. That's why a lot of the deeds of trust or mortgages will say second position lien or record second. If that's not there, then there can be escrow instructions. And that's the instructions given at the time of closing that said, this is the way things are supposed to be after the fact. You have a separate argument on it because the other mortgage, let's call it, recorded so long after yours. And I'm going to assume it's even dated afterwards. If it's dated prior to, that's a different matter. But because they recorded a long time after yours, that's called constructive notice.
So can I stop you for 2 seconds?
Thank you, because I was hoping you would say don't talk too much.
No, I want you to continue on, but I'm going to stop you and say it was executed before mine. It just was recorded 18 months later.
Mm-hmm. And what is constructive notice?
Oh no, I'm not. I didn't want to stop you from where you were going. What I was trying to say is it was executed first.
Yeah, but do you mind saying what is constructive notice and how that's defined?
Oh, I don't know. I'm not an attorney. What is constructive notice?
Oh, constructive notice is just through a reasonable due diligence. You're supposed to be able to determine what is of record effectively. So that's why the assignments are recorded. It constitutes constructive notice. So if things are recorded on the same day, then there's really no way somebody would know because they can't search that. But if something, recorded 18 months prior to, clearly they can go on public records and find it easily.
Right. So let me say this. So like I said, this is before we knew anything about notes. We didn't know anything about really due diligence. We were just kind of throwing our hat in and our money. And so we didn't, like I said, we thought we were buying a second, turned out to be a fourth, which we had.
Yeah, I'm looking at title on this one right now.
Mm-hmm. So like I said, when we bought it, we thought it was a second, turned out to be a fourth. In my getting those 3 liens satisfied, we slipped into first.
Yeah, you got those recorded in 2016. So anyway, sorry, ADD and slate. So with the lien position, you have the escrow instructions that determine it. Now you say that there was plenty of constructive notice, therefore they should have known. And the fact that they're sloppy and whatever else they didn't is their problem. And by their problem, that's saying that they should have a title policy. They have a title claim because title policies guarantee the state of title at the time of origination or as of a certain, point in time.
Right.
And if they don't have that, that's their problem. Oh, well, you probably should have recorded it. You could have, would have, should have done whatever else. And that's your argument. Now, we had one similar in New Jersey, oddly enough. Exact same scenario. We recorded first and the other entity recorded a lot later. Put them in foreclosure. We're title, we're first position. And they fought us in, court. And we made our argument, they made theirs. They came out with an unrecorded subordination agreement. And PNC was the first, PNC was the second. We bought the second, so to speak. And I'm saying how
same exact scenario as me.
Yeah.
Apparently.
And they, like I said, they came out with an unrecorded subordination agreement that is not a public record or anything else, and got authorization from the courts to record it. And our attorneys were like, well, do you want to fight it? I was like, how the hell can we fight it? The PNC didn't know that PNC was recording another lien. So there's nothing we could really do about it. We lost that case, but we're still second position, and it actually worked out. I'm doing some of the paperwork for it right now. We didn't do anything. and the first eventually foreclosed on the property, and there was surplus funds, and we're getting $81,000 actually.
So for, I don't know if you did any AVMs on our property, the one we just talked about, Canellen.
Yeah.
But it's worth about 700,000.
Mm-hmm.
I mean, Canellen is a reasonably upper class.
You know, you didn't actually need to get those other liens released, right?
No, but the lawyers were telling me that you're fourth and we have to do this. And
I mean,
blah,
it's
blah,
a
blah,
good
blah,
idea
blah.
to do it, but if no money's owed, no money is owed. And you can always just, if you take title back, it may look like you're in fourth position, but really you're second.
Yes, right.
It's not your fault those other liens haven't released their, interest, or at least reconveyed their lien. So once you go to sell the property, either title can insure over it, or they can deal with it at that time. It doesn't have to stop the foreclosure at all.
No. The first was foreclosing, and now the reason we're stopping is that we're fighting for first position. So it's just a lot easier to illustrate to the court.
They've been foreclosing since 2013.
Well, because we stopped them because we're first. So we've been in litigation on this for a long, long time.
Mm-hmm.
So being in first, they owe us, when you add in the interest, arrears, and everything, they owe us about 400,000. So it behooves us to stay in first position or defend that first position on a
No,
house
I get it. Yeah.
700. And we paid 23,000 for it. So it's a win all day long. It's just taking forever.
Well, as long as it works out.
Oh, yeah. Well, the circular theory goes to what you were saying at first. What was intended to be should be.
The other way to phrase it is it's title theory lien theory versus title theory.
Okay.
That's the other terminology for it.
All right. And everything that can go wrong, just for your own edification with this case, has gone wrong. I.e., our lawyer sent a check they agreed something happened.
You're going to make everyone log off if you go into the nuanced details of one note.
No, this is real quick. We missed a deadline for something, and our lawyer wanted to reopen it. They agreed as long as we paid their legal fees. So we made a payment to the court to cover their legal fees so the court could give it to them. And then the court never forwarded it. And so then it was delayed again and blah, 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 blah. Like everything that could go wrong with this note has gone wrong. It's just one of those annoyances. But anyway, that's my current horror story. It's why Gemini is still open. Otherwise, Gemini would be closed. Jason wants to know if you have an in-house asset management department.
You're talking to him.
That would be Matt himself. Does that work for you, Jason? You can reach out to Matt if you like. Matt, can you type your contact information in the chat there?
I'll give the foreclosure one.
Yeah. Matt also specializes in foreclosure in California, but where else? 9
different states. We're trustee corps and special default services. We're a foreclosure trustee in a total of 9 different states. So we're the guard dog in the event somebody's not paying their mortgage. We're the ones that process the legal paperwork involved to collect upon the security being the property. California, Arizona, Nevada, Oregon, Washington, Idaho, Montana, Texas, and Alaska.
Cool. Oh, Alaska. You probably don't get much business in Alaska, do you?
Not at all. Yeah, that's fine.
Such a robust economy they have. So there's his contact information, Jason. It's mkelly, Kelley, at specialdefaultservices.com. And his phone number is 949 310-310-9736. And I'm repeating it for the purposes of the live stream. Jason says, so all the notes you're buying is for your personal investment portfolio, your day-to-day business is as an attorney?
Not an attorney, foreclosure trustee. Our job is to stay out of court. What I think they're getting at is effectively the story of why it is we do what we do, and that's you too, but myself. So I started working at this company a very long time ago, well over a decade ago, and I was auditing files, sales. I've done about everything there is to do within this company, and that's a foreclosure company. But when you say all road leads to notes, I mean, we used to buy properties on the courthouse steps. Well, I like my office. It's air conditioned. It's a lot easier to control the sale and actually be the bank. And of course, being a foreclosure trustee, we'd see a lot of where people were effectively buying notes and who was buying them. And dear God, if they can do it, we can too. So we used our very specialized knowledge that is of title, of collections, of foreclosure law timelines to our advantage, and have purchased large portfolios of notes and have done very, very well with that. We've done small transactions too, the one-off deals as well. So we've done a little bit of everything, and we're still always open to doing everything. But we put our money where our mouth is, and that's where I personally and very heavily invest. We have taken investors in the past, so to speak, and that's a very, very rare deal. We don't do it very often at all, usually for nothing less than $1 million. But that's just because of the money that we have done. We've done very well with it, but we've encountered far more deals than capital. Or at least we find more deals more often than we get notes to, we don't get entire portfolios to pay off before the next tape comes out.
Yeah, I'm not a big fan at all of joint ventures, for lack of a better word. Not a fan even a little bit. So I don't mind commingling funds to get better pricing, but you own your notes, I own mine.
Yeah, no, that's separate. What I was talking about is, somebody acts as a wallet. We buy the notes under their name. We do all the work and get a percentage of the profits.
Right. So does that make sense to you, Jason?
So yes, we personally purchase notes, and we don't tend to, sell too many notes for understandable reasons. Of course, we've done that in the past, but it's something that we don't regularly engage in. And don't get me wrong, things may change depending on how things go in the next couple of months with a lot of the qualification meetings and processes we have to go through, but time will tell.
Jason writes, I can't tell if you have a fund as well. No fund.
And Kathy will probably tell you that the reason we generally don't do that is because I'm very stubborn.
But ridiculously informed and fairly free throwing. What's the word I'm looking for? Happy to share.
I don't see any reason not to.
I know. I think it's awesome.
Yeah, and I don't do any education program. We freely share information, templates, demands. You've seen me doing presentations all over the US. Normally to have something even close to what the conversation we're having now costs a couple grand at some of the conferences. But yeah, I freely share all the presentations that I've done, where to get notes, some of the processes involved. To me, it's an outline, but the rest is pretty easy to figure out, if not already get it. And there's plenty of information available online. There's no we do fine. We make our money by investing in notes, not by education or anything else along those lines.
Well, I do that, but only because for me,
You're
I'm
not getting
dedicating.
rich off of it.
No, not even a little bit, but I'm giving you like 2 full days of time, and that time is money, you know what I mean? So that's why I do that.
And I put a lot of value on having the ability to hang up.
There you go. So, you know, there's that. I don't do that, but there is that. So, you know, there's different reasons people do what they're doing. You know what I mean? Jason also writes, when you use the term underwrite, I like all these questions, Jason. Keep them coming.
I like using underwrite instead of due diligence.
Well, that's what he was asking. That was going to be his. Is that the synonym for due diligence?
No, due diligence is the synonym for underwriting.
Right.
Underwriting is what it is. I mean, you weigh and measure the enforceability, the profitability, and every aspect of a promissory note. Calling it due diligence is something that was coined by some educators many years ago as an alternative to the actual understood defined term of underwriting, because there are a wealth of resources available, especially in regards to the origination of a note, but only subtle changes to some of those systems can assist with the automation in underwriting as to non-performing and notes generated a really long time ago. The automation is very difficult to accurately do. A lot of it does require some knowledge and research. Some of the best ways I really do think people can learn is what I'd call a dry run. You get a tape of notes, do some of the underwriting as to it, and compare notes with somebody else at a later point in time and see what you missed. It'll start showing the gaps in one's due diligence, whether it's understanding as to bankruptcy. Like we said, there's military. You may not know how to check to see if something's on Indian land. You may have expected yields and returns, but it may be off due to the extended collection timelines within that state, as very often it's encouraged not to base one's underwriting or expectations on the best case scenario, but rather the worst, and then use that.
Well, you know, what's interesting is a lot of times before I started doing notes and understanding the concept of due diligence, because we just kind of went in blind with the $300,000 trade. And we were good. And we kind of hoped it worked out. We really didn't understand due diligence at all, and we didn't even consider it as something we needed to do, which is really.
I remember some of those phone calls.
It was really stupid, to be quite frank, but that's what we did. And along the way, we just basically learned everything on our own and reaching out to people like Matt and figuring things out. And to be, I'm one of those people who learns by doing, not by listening. So in the end, it actually turned out to be a better way for us to go. Jason writes, what services are essential to being able to conduct due diligence on large trades? Is it CoreLogic versus us small timers doing everything manually across all sorts of websites from Zillow to county records?
What part of it are you talking about?
He wants to know if it's worth reaching out to like a CoreLogic to get the due diligence done. It's basically the question.
So why I struggle with some of these questions is I'm very, very literal. So there's different aspects to underwriting, and CoreLogic does very, very little of the underwriting process. And the more you outsource, the more it affects one's bottom line. I'm actually just going to reference some of my old presentations, quite honestly. I'll forward it to you as well.
Yeah, I couldn't actually agree with that statement more, to be quite frank. Nobody is ever going to honor your money like you do, ever. And a lot of this automated
a lot of them are just limited.
Well, that's what I was also going to say. A lot of this CoreLogic stuff is really high level.
Well, No, I think it's low level.
Well,
CoreLogic is great.
wait. Let
for-
me refer. I'm an IT person.
Yeah.
When we say high level, we mean actually like user friendly, not the IT.
It's macro, not micro. It's great to
Yes, right.
find out, is home prices might be rising in Chicago versus who cares somewhere else. Let's see here. So for bankruptcy, CoreLogic is very, very poor at that, and they can pull, is the bankruptcy open or not? That costs almost nothing to check on Pacer oneself to do it, and just typing in the social or name or a variety of other information. But we like to look at all the filings because I want to know if they filed 5 times previously, if they filed recently and it was dismissed. Because bankruptcy is fantastic because it's a photograph of their life at a given point in time, how much money they made, their intent, what they tried to do, why they filed. Were they trying to get rid of a lot of credit card debt and irresponsible purchases, or circumstances happened? They acquired a lot of medical debt, and it was years ago. The list goes on. Credit reports are fine, especially from CoreLogic. You can get it from the CoreLogic is good pricing on a very small purchase scale. Larger scale, use different companies because they're expensive, but it's they don't really have minimums. So they're good for that. But credit reports are really bad at saying exactly what is owed on the first mortgage. They may not have even the first mortgage on there. Just, of course, it doesn't mean it doesn't exist. But it is good when you can find the first mortgage because it gives you the loan number and who holds the first, not necessarily via title, but who's servicing it, because the servicer and the holder of the note can be two very different things. And it's great to find that. So when you try to find out what's owed on the first, you have most of the information that's needed. If you want data and statistics on a given area, I highly recommend Atom Data, ATTOM data.com. I'll type that in the link too.
We've used them before. In second, we don't really care so much about the neighborhood or demographics or anything, but we have used it in some cases.
It's good for presentations, and some people like it.
Yeah.
Property values, Zillow has the, I think it's called the API, that you can just download thousands of them at a time.
I use that.
And it's not the gospel truth, but it tends to be within a ballpark. And that's where we say, well, it's not the exact value. Yeah, well, we do surgery with shotguns, not lasers. So we tend to have huge margins, and we can look at things with a fine-tooth comb. But if you're doing due diligence on a large scale, it's hard. If you're looking at 10, yeah, look at them closely. But there's only so much that can be done. And if you're buying notes, like you mentioned, you bought some notes for, just a couple grand. You're buying the note for a couple grand. You're not going to spend a couple $100 just getting a BPO before you ever even buy the damn thing. Once you own it, maybe a different scenario, but really it tends to be extremely expensive underwriting, especially if you're ordering that stuff and you don't win. So the other thing is title investing. That's actually checking the chain of title. I mean, you mentioned the address of that property, and I did it in less than 30 seconds. And I didn't order it from anywhere. All I did is I jumped on the Morris County Public Records, went to the county clerk, and then typed the homeowner's name in, and I found all the information.
Yeah, it's not that hard actually to find.
It's really easy. And if you don't know what you're looking at, just read the documents. Most counties have the images available.
Yep.
And if not, you understand it says deed of trust. You don't need to know all the details in it. It's still there. So anyway, to learn title, just read. There's a decent title proof. I think it's Bulletproof something or other by the pro title guy, Alex. That's actually a good title book. It's very, very dry, but so is title. There's systems you can do things very quickly and inexpensively. I can go over those, but I don't think that applies to anybody on the call. Just call me otherwise and I'll tell you. Skip tracing, there's TLO. That's good for small investors. If you want a little more high-powered systems, it's Thomson Reuters Clear program is great.
We use TLO because we're smaller. And it is for the small investor, TLO is the gold standard as far as I'm concerned. Although they used to give
Within our group,
Go
go to the larger conferences, TLO isn't there, and none of the hedge funds use TLO.
well, I also can't report because I don't, have 4,000 notes to report. I mean, in a small investment arena, it's the gold standard. It is, it just is what it is.
Well, for title, I will say we don't answer questions when it comes from certain companies, like I'll say Pro Title, because there's 3 different things to attach a lien to a property effectively, and that is, or do you want to talk about it, Kathy?
Oh no, you go ahead. I'm letting you write. I'm glad to have you. This is
I didn't call to talk. I just
well,
called to see what the hell you wanted to talk about.
but I always love it when you do.
that's how
So
you
it
roll.
works out for me.
So anyway, the 3 ways to find something, and this is all where the problems arise, is first off the assessor's parcel number. That does not mean that this is most often applies to municipal liens, waste and abatement liens, various things along those lines, because it doesn't really matter who owns the property. It attaches not to the individual, but to the actual property. So if you do a grantor grantee index search, those liens are not going to necessarily show up. The next of which, as I just mentioned it, the grantor grantee index. That's where you type in the person's name, and everything with the person's name will show up there. That would include that may include judgments, and judgments would show up because, again, it's against the individual, and as it's recorded, it may attach to anything that individual owns within that county. So the assessor parcel number would not necessarily be on it. And the last of which is the commonly known as address, and that's just the street address of the property, and that may attach it to as well.
So let me just say a few words about title searching. Not all counties display information at all. Like California, as example, gives you almost nothing. If you're just doing a personal search, if you have like a service that may give you stuff, that's a whole different thing, probably expensive. Some counties will literally, when you put in a person's last name, will literally give you everything, including arrest records and domestic violence cases.
Oh, that's all there.
kinds of-
It's just in a different website. I can tell you how.
No. Well, I'm just talking about title searches at the moment. You can absolutely always find all that stuff. But I'm saying during the title search, some counties just throw everything, all court records and title records, land records rather, all in one search. So that's also a possibility. Like we found out one guy that we had a note with was a pedophile. It's horrible. Because that county gave that kind of information.
You're not going to get a workout.
Yeah, right. So a guy in Florida, but his wife was living in the house, turned out to be a little bit more difficult.
Well, was she on title?
She was. So.
Well, it's easy to serve them. It's not like you can avoid service.
Yes, right. So the other thing, when you on the websites that do give you images, and not all do, but on the ones that do, you need to look at for 3 different things. 1, is it the property you're talking about? 2, how much is it? In other words, is it for the first or the second? And 3, who it's made out to, who's signing it. So, make sure it's your borrower, in other words. Those are just my few things to add to what you were talking about. Now, where did you want to go with that after?
It's still your program.
I know, but I'm just so glad to have you. I'm taking advantage while I can.
Get you everywhere.
Taking advantage while I can. I just wanted to add that to title searching because there are nuances.
Title searching, that's the easy way to do it. It's free most of the time, and you don't have to read the documents most of the time. You just have to know that they're there. If you do really want to read the document, such as they have a recorded modification. If the image copies aren't available, you can usually order them directly from the county electronically. They'll deliver them immediately, or there's services that'll do it very inexpensively.
Right. So does that answer your question, Jason? Oh, so wait a minute. So he has a question. So on average, how much time do you spend underwriting a junior lien? I spend 45 minutes, and that seems pretty inefficient, especially for larger trades.
Including phone banking, probably 5 to 10 minutes at most. I may spend 30 seconds doing it because I don't look for yeses, because we'll take a lot of risk in many scenarios. We look for no's, and that's oh, look, this lien's been stripped through a Chapter 13 bankruptcy. Done. And we move on.
Right.
But otherwise, yeah, 10 minutes. The reason why I'm saying 10 minutes, because that should be the next question. The process I'll go through when actually checking it is I'll check the bankruptcy. And I do that via Pacer. I'll check the senior lien status. That's my phone banking credit report. And the reason why I do those things, bankruptcy, is it there or not? The next which senior lien status is because first mortgages need to worry about taxes. They need to worry about the property condition. They need to worry about a lot of other things, because first mortgages are effectively depreciating assets, because the property tends to depreciate in value as time goes on because it's not being fixed, updated. Everyone knows they're not paying their first mortgage. Not everyone knows they're not necessarily paying their second mortgage. I can elaborate on it if needed, but anyway. So second mortgages, you mainly just have to worry about the first mortgages, because the first mortgage pays the taxes. If the homeowner's paying the first mortgage, they're probably taking care of the property. And especially when later on we check the occupancy, well, I'm going to take a guess and say the property's in pretty decent condition. So anyway, then I'll check property values, because with the senior lien status, including the total amounts owed, deferred balance, principal balance, everything included, I can weigh that against the general value of the property. And now I know my equity position. To get finite details, I'll check title, especially if it's non-performing, but I really want to check just to make sure my lien's there. I see deed of trust, or I'll see 4 deeds of trust like you did, and I'll make sure that there's at least 2 reconveyances. And I'm like, okay, so my lien's, secure. Perfect. I'll check title because I also want to know if they've been in foreclosure a bunch in the past, because that's what the first mortgage had to do to get their attention. Guess what I'm going to have to do? But I mean, if the first is current, I know that they're not in active foreclosure because they're not defaulted on that. At a glance, I can check, because we're told when the note is due from. I can compare that to the statute of limitations and see if we may proceed accordingly with that. And preferably, I like to know the cost of the note provided by the seller, unless it's a blind sealed bid. Give me your highest and best. And then I can try to price it out myself. But generally, I like being told pricing expectations by the seller. And on large scales, we'll put a value on each individual note. And then, of course, it equals up to a certain number. Right. Occupancy, the assessor's office will have that information as to the mailing address for tax purposes. And that's where you can use skip tracing for it, but credit reports usually have their address as well. And not all of it's necessary, because it doesn't really matter in some circumstances whether they live at the property or not.
Well, tax assessor is good for something else too, and that's to find out. I usually actually do that first if I'm going to do that, because it tells me if they own the property still.
Yeah, that's where you'd see the grant. I forget what it's called, the search, but anyway, it's just where you check to see the vesting.
Right.
And we'll pull that, and that's on a massive scale. Like, that's when we look at 1,000+ notes at a time. I'll pull that and just compare them all, and then I'll sort those into the unsecured category at a later point, and I'll go through and I'll double check. Like some of them, oh, the homeowner has the same last name. Maybe they got a divorce and just transferred it over to the wife. But some, it's clearly somebody else. And we bought notes that are secured and the homeowner just grant deeded it over to somebody else, or their spouse didn't have the same last name as them, or they gave the property to their kid or whatever else. You can grant deed it all you want. It doesn't change that the money's still owed.
Right. Right. So how is that for you, Jason? Is that phone banking? This is a big one. I've heard that it's not legal for us. Is that true? Never worried about it before. Now I'm wondering about the liability.
What's the liability?
He's asking if there's, if
I
it's
know that.
legal.
What you got to tell me what you think the liability is.
Oh, I don't know. We don't do it. We're in second position. We don't do that. We don't buy firsts ever.
Phone banking takes place when you're. So I'm speaking in generalities. The term that most people use when they're referencing phone banking is calling into the automated system available from the servicers. And with information such as a homeowner can call in, type in, let's say their social and zip code or one of a various other information. And the first will, in their automated system, say, your payments are current, your last payment was received on X date and X amount, your unpaid principal balance is, this number, and to get a payoff statement faxed to you, type in the fax number. And if one were to put in the fax number, the payoff statement will be sent. And the fees affiliated with getting the payoff statement are only incurred in the event the actual note, the amount is paid off.
Okay, so I apologize. When you said
No, no,
phone banking, I took that to mean calling the homeowner. I apologize.
no,
I
phone
didn't
banking,
realize.
that's,
Yeah, I didn't
yeah.
realize that's what you were talking about. We do
Yeah.
that. Absolutely.
So, well,
We do
so
that, and there's no
keep-
problem.
right. So, well, that's just, you've never been sued on it. So there's a couple things. First off, as the subordinate lender, one is entitled to certain information, including the amounts required to bring the first mortgage current. That's generally law. I'm not aware of any exceptions to it. Now, prior to the purchase, one is you're not the subordinate lender. So you may not be, they're not legally obligated to give you that information. But
Yeah, we don't do
like
it
I
on
said,
notes we don't own.
Yeah, I think Matt, you asked originally what is the perceived liability, and I think it's just that you're somehow impersonating the homeowner or something in general. That's sort of a newbie concern.
oh, I understand. I'm not aware of any liability with that one because it's also how the hell do they prove? Let's say if you were to call in, how the hell do they prove that it's you? One can call in from any phone number you want. Google has that ability. Everyone has it. You can call from any phone number. And even if your phone calls, it doesn't mean that you actually called. And if one becomes the second mortgage or you acquire the lien, you're entitled to the information anyway.
Yeah, but you're not prior to buying the loan.
Right. I wouldn't ever do something like that on a loan you didn't own.
Well, it's, but again, what's the liability as a result of it if one were to do something like that? I'm not aware of the liability that there is any because there's no damages. And there's also no way that I'm aware of that one can effectively prove that, said individual like yourself called in on a random person's number and got the information. There is liability on the actual first mortgage. Like they are supposed to have systems in place that prevent people that are not the homeowner from calling in and getting certain information. That part's true. I used to remember all the name of the laws in regards to it. But the homeowner or individual whose mortgages also are entitled to know the amounts that are owed to them. so often they have to have the ability to call in and get it.
What about the idea of like the fax back payoff?
I wouldn't ever
If
ask
it comes
for
to
that.
it comes to my fax machine. I mean, how do you really argue that?
I wouldn't ever
Again,
ask for the fax.
so you were sent that. Did you request it?
Yeah.
They sent a fax to that number. So what?
Yeah.
And furthermore, as there's no cost incurred with the, any possible amounts required to pay off the loan. And this would be, as an example, get a payoff statement. One gets requested several months later. Is the amount required under that demand all of a sudden, doubled? Or is it the exact same thing as it was before? Because clearly it was waived. And it's automatically waived. So that's something I'll definitely point out, that because otherwise the problem is when notes are being offered, 20 different individuals may be requesting payoff demands all of a sudden. And that would be on the statement being like, whoa, all of a sudden there's $500 owed for these payoff quotes that wasn't you. And in this circumstance may not even be the homeowner, but it's not the circumstance. It just says, whatever amount in the event the loan's paid off, that'll be the fee for the payoff quote.
Yeah, I personally would never ask for the fax copy. I would just be happy with the number I received. And by the way, there obviously
I will
is
say
some
that
issue with it because Aquin stopped doing it. Aquin,
PHH does it. Every lender does, every single one, because they're required to send things via fax. But anyway, I will say that it is something where we do want the payoff. And that is because I want to know exactly what is owed on the first mortgage, as the unpaid principal balance certainly may not include the deferred principal balance if there is a prior modification. And in the event that it's non-performing, I want to know exactly what it is. I want to know exactly what the rate is. I want to know exactly what their payment is. The story of a loan, effectively what I should know about every single loan that I purchase, and we do, and Kathy will tell you about our process and our reputation for underwriting. Who holds the senior lien, if any, the purchase price plus estimated collection costs, timelines, and everything else. The senior unpaid principal balance, the amount owed. And if you're sitting here saying, "Well, I buy first mortgages, there's no senior lien." Actually, there probably is, not just taxes, but in some states or areas, the homeowners association is in senior position. And then there's other circumstances, like in various actually it's nationwide, but I'll use the programs in California for an example. The HERO or PACE loans, they're solar loans, but they're paid for via the property taxes. So the first mortgage doesn't need to authorize it. The second mortgage doesn't need to authorize it. They're included with the property taxes, so that changes the CLTV.
does that make sense, Nick?
Oh yeah, that makes sense.
Awesome. Yeah, that's the thing. First lien is always, he makes a really point that I'm going to punctuate. First lien does not always mean first lien. There definitely could always be something above that.
And just because it recorded, shortly before the other one does not necessarily mean it's first. Oh, and that's the other thing is, I know we had this conversation in the past, equitable subordination.
Mhm.
That's another defense where a junior lien, another lien recorded after yours would say, well, our lien is 300,000 and your lien is 20,000. We should be in first position, not you.
Yeah, I think that's probably easier to defend against, but never know.
But that happens. And it's
equitable.
Sure. It's a good Google, equitable subordination. Not all states, follow that, but some states, that's a defense.
Now, if you go back to my note example, interestingly enough, what is claiming to be first, if I'm not mistaken, is 250,000 or 200. So it's either 200 or 250. I can't remember.
You're hung up
Ours,
on that one note.
I know, but I'm just going back to it because it sort of illustrates the point you're trying to make, or that you've made. And ours is 250,000. So they're both the same or similar. And so in my particular case, it's the exception that proves the rule, I guess, is that that still doesn't work here because they're both the same. That note is like a crawl in my side. Jason, this webinar is in fact on YouTube at the moment. We're live streaming. Jason is leaving. Our questioner is leaving. Steve left us too. I'm sorry, I'm looking at the live stream here. So, does that answer everyone's questions for this evening? Because the only one who was asking questions was Jason, and he just left. And Nick every now and again.
No, that was great. Good conversation. Thanks, Matt.
Well,
Happy to help out.
I'm glad Matt joined. I didn't have to talk much tonight. It makes me happy.
What's your next event, Matt?
One that I'm speaking at, I think I'm speaking at Noteworthy in California.
Yeah.
Hey, let me ask you a question about Noteworthy. I understand it's actually become relatively decent and not the sale fest that it used to be.
Correct. It's owned by primarily owned by Aaron Halderman. And I've had lots of conversations with him about it. And I've made some recommendation who he should be getting to speak there. But yeah, we very closely watch with whom we affiliate ourselves with. And, you know, that's the problem with a lot of the small conferences is because they don't generate, they're not expensive. So they don't generate a lot of money. And it's very tempting, as I understand it, for those that host them, because usually the less reputable individuals are willing to pay a lot more to get in front of an audience and be granted credibility as such. Whereas individuals like myself, we're not going to pay to talk. We're happy to help out and to, pay it forward, so to speak. But I'm not going to pay a couple $1,000s to sponsor an event at all. It's just not necessary. And those type of events for us really aren't revenue generating. I mean, we go there to help out. We don't go there to market.
Right. Well, I'm glad to hear that because I took Noteworthy off my list a long time ago because it was literally nothing but a sale fest.
Well, that's where you look at who's actually going and, are they covering subjects that you're going to get something from? If they have some legal experts, we contacted them with the Los Angeles Sheriff's Department Real Estate Fraud Department. We wanted them to talk about real estate fraud and some of the things that they do. I don't know if he's going to have them on, but I recommended them to him. Some security firms talking about information protection and certain laws around that. And these are all people we know and have dealt with and also heard it speak at other conferences, as well as reaching out to some larger players that, were at IMN or CLO or a lot of the other conferences that go out there. We referred them over to auction.com. They were seeing if they'll do a presentation on how to buy a property at foreclosure sale and things like that. And by the way, a really, really good idea. If you want to learn title, just go on auction.com and look at their due diligence package. I'm not saying buy anything at all. That tends to be ungodly expensive, especially in their notes, which their note is 10x. Just Google it, 10-x.com. And they have essentially the best due diligence that's available. Again, they have about a $50,000 closing cost minimum. and they tend to sell hotels and commercial buildings and things like that for notes. And but it's good to look at it and then try to recreate it effectively. Once you have the answers, go back and look on public records and look in the various ways that you can look, and see if you can find the same information that's available on that on their due diligence package.
Well, all right, Matt, I'm going to let you off the hook for this evening. I'm so glad you joined. Thank you so much. Nick, do you have anything else you want to ask?
Nope, that's good. Thanks again.
My pleasure indeed. So, Matt, once again, thank you, thank you,
Always
thank
pleasure.
you.
Good luck. Bye.
Nick, do we have to get together? Because I forgot. Did I forget to do something for you?
No, I don't think so. I'll get in touch with you next week. I've
Okay.
got some things happening, but yeah.
No, I think that's good because I literally have been down for the count for at least 4 weeks.
Yeah, yeah.
I'm only now just starting to like slip out of it. So,
Okay.
well, all right. But did I send you? I did forget. Did I send you the database?
No.
So I did. Do you have any idea how much time I spent stripping it out?
I think you didn't send it. Nice.
My gosh. All right. All right. So I'll send it, and then next week you can reach out to me.
Okay.
We'll put something together.
Okay, good.
All right.
Very good.
Thank you so much.
Talk to you soon. Bye-bye.
All right. Bye-bye.